The wave structure of TLT flashes big warning to the stock bulls. The disinflation party is over. January CPI is a red flag for the bond market. The Fed wants you to believe and forget hard landing and soft landing. What about no landing? Imagine you are officially invited to fly in the Federal Reserve private jet. You are on the altitude of 36,000 feet, but their engine is running way too hot. They need to land soon or else it might catch on fire. But they told you they are not going to soft land, but not hard land either. They want to re-accelerate their speed. Not landing at all. Let the engine burn. Just YOLO policy. Kind of like how they let inflation run hot to 7% before they decided to stop quantitative easing. This time is the same. Let's re-accelerate growth and keep raising rates at the same time. See if inflation's going up or down. They say their goal is 2% inflation, but in reality, I bet they only want hardship for regular folks. The longer that this plane re-accelerates at 36,000 feet, the bigger the risk of running out of fuel or the engine will blow up. Why there will be one last chance to buy TLT for cheap, based on its wave structure. Why disinflation is short-lived. And the second inflation wave is here. They will raise it higher. That will trigger the deflation shock. I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Inflation moderated from historic highs, but the pace of easing is starting to level off. U.S. inflation moderated only slightly in January from historic highs as price increases firmed up at the start of the year. The Consumer Price Index, a closely watched measure of inflation, climbed 6.4% in January from a year earlier, down from 6.5% in December. The Labor Department said Tuesday. That marked the 7th straight month of cooling in annual inflation since peaking at 9.1% in June. The highest reading since 1981. January's inflation rate was still much higher than 2.1%, average in the 3 years before the world crisis. But from a month earlier, inflation firmed. The CPI increased 0.5% in January from December, compared with a 0.1% increase the prior month. The cost of shelter was the largest contributor to the monthly gain, the department said. Prices for food, gasoline, and natural gas also rose in January. Core CPI, which excludes volatile energy and food prices, rose 5.6% from a year earlier, down from 5.7% in December. Many economists see the core measure as a better predictor of future inflation. Core prices rose 0.4% on the month in January, the same as in December. Core prices increased at a 4.6% annualized rate in the 3 months ended in December, reversing a trend of steady decline at the end of the year. The latest readings come as the Federal Reserve raised interest rates aggressively in the past year. Earlier this month, the central bank raised its benchmark rate to the highest level since 2007. The Fed is trying to combat inflation by slowing the economy. Officials indicated in February they anticipate lifting rates further in 2023. We see ourselves as having a lot of work left to do, Fed Chair Jerome Powell said earlier this month. Inflation typically runs hotter in January as businesses reset prices in the new year, said Omar Sharif, head of the advisory firm Inflation Insights, LLC. Economists forecast that the U.S. economy will contract this year may be amplifying that. If you think the economy is going into a recession in the summer, this is probably your last chance to take a bite of the apple before the economy slows down, said Mr. Sharif. It's sort of the last hooray for price setters. The January data includes annual updates to historical seasonal factors, which affect the 1-month price change. Using the new seasonal adjustments, both overall and core inflation cooled less towards the end of 2022 than previously thought. The new data also reflects an update to the weights of goods and services in the spending basket to capture changes in consumer preference. The Labor Department previously updated these every 2 years, but starting with Tuesday's release, will revise them annually. Elevated costs are causing families to make trade-offs. Bobby Kennedy and his wife had hoped to upgrade from their small Manhattan apartment, so they would no longer need to share a bedroom with their 2-year-old daughter. Rent for a 2-bedroom in their neighborhood, which they like because of its good schools and walking distance to Mr. Kennedy's office, runs around twice as much money. That is a stretch for the couple because childcare costs are squeezing the family's budget too. Mr. Kennedy, 38 years old, said his daughter's daycare facility recently raised its monthly rate by more than $100 from last year's rate. If we moved to a bigger apartment, we'd have to stop saving, said Mr. Kennedy, who works as an investment manager for an energy utility. For now, he and his wife are planning to cede their bedroom to their daughter to help her sleep through the night and sleep in their dining room themselves. The squeeze on their budget and their living space also means compromising on other plans, such as growing their family. We would love to, but not now, said Mr. Kennedy. But we have to make tough trade-offs, whether it's having another bedroom or having another kid. Inflation shot up in 2021 as the economy bounced back from the 2020 world crisis, fueled up by pent-up consumer spending that was supercharged by low interest rates and government stimulus. Strong demand collided with gummed-up supply chains, causing shortages and pushing up the prices. Russia's invasion of Ukraine in early 2022 also squeezed supplies of energy and other commodities, further inflaming inflation worldwide. Many of those dynamics have reversed. Shipping costs from China to the West Coast are down 90% from a year ago and close to pre-lockdown levels. The national average price of regular unleaded gasoline was $3.42 a gallon on Monday, down from mid-June's record of $5.02 a gallon. According to Audacious, a data and analytics provider, economists expect shelter price gains to ease this year too. It remains to be seen whether these global factors and Fed policy decisions will continue to put downward pressure on inflation. There have been some recent signs pointing to still firm inflation. Gasoline prices, for example, are about 13 cents a gallon higher in recent days than in mid-January. Hiring remains strong and the unemployment rate fell to 53-year low in January. That could act to keep wage growth elevated, which factors into service sector prices. U.S. Strategic Petroleum Reserve, SPR, lowest since December 1983. Biden administration will drain 26 million barrels more from the SPR. The daily consumption is roughly 20 million barrels per day, so the SPR will be reduced to just 17 days of consumption and roughly down 50% from its highs. Ultimately, it comes down to this. Market is more expensive now at $4,100 than the previous highs at $4,800. What's changed since then? Number one, interest rates are higher, hampering growth, which is just now starting to materialize. Number two, earnings have already declined, with growth estimates plummeting as described in point one. Number three, Fed is tightening, which is currently being offset by the Treasury. But this offset will end once debt limit ceiling is raised. Number four, inflation is still high, which is impacting the consumer, leading to all-time high credit card debt and savings rate plummeting. We are a consumer-driven economy. If the consumer is under stress, so are the company's profits. Just looking at these points, it should become obvious to you. We are destined to make new lows. Looking at the wave structure of TLT and S&P 500. So far, it looks like an ABC wave structure for both TLT and S&P 500. If you know anything about wave structure, you will know that ABC waves are corrective wave structure, usually have higher probability of failing. As of right now, the stock market is still led by the bond market. You can see it from the pricing action here. TLT has broke the trend line and backtested failed. It could go lower and retest the November low and drag stocks down with it. This will be your opportunity to buy TLT if you believe there's a recession coming this summer. The bear market rally is on borrowed time. That's all I really got to say about it. Of course, this is not financial trading advice. I am not your financial advisor. I do not know your financial condition or your risk tolerance. But if you want to sign up to see my moves, join my Patreon today to see all of my next moves. This is my collaboration book with all the incredible authors. It's already yours, Adversity Equals Success. Such an amazing book. Order your copy today. And my book time. You are such a good boy for watching my video right till the end. Bye.